Friend or foe? Demystifying the QQQ ETF with straightforward QA. The Invesco QQQ Trust, better known by its ticker symbol QQQ, is a behemoth in the exchange-traded fund (ETF) landscape. Often referred to simply as the QS, it tracks the Nasdaq 100 index, granting investors exposure to the 100 largest non-financial companies listed on the Nasdaq stock market. But in the dynamic world of finance, even iconic entities like QQQ come with their share of intrigue and complexities. To delve deeper into the mysterious allure of the QQQ, we've crafted a QA format to shed light on its essence, appeal, and potential pitfalls. Buckle up, fellow financial sleuths, as we embark on a quest to unveil the secrets of the QQQ ETF. What exactly is the QQQ ETF? The QQQ ETF is essentially a basket of the 100 largest non-financial companies listed on the Nasdaq stock market. It functions passively, mirroring the composition and performance of the Nasdaq 100 index. Investing in QQQ grants you instant diversification across various sectors, including technology, healthcare, consumer goods, and retail, with heavyweights like Apple, Microsoft, Amazon, and Tesla leading the charge. What are the advantages of investing in QQQ? QQQ offers a potent cocktail of benefits for investors. 1. Diversification. As mentioned earlier, QQQ provides exposure to a multitude of sectors through a single instrument, eliminating the need to pick and choose individual stocks. This mitigates risk and smooths out portfolio volatility. 2. Liquidity. QQQ boasts one of the highest trading volumes among ETFs, ensuring ease of buying and selling at virtually any time. This liquidity offers flexibility and facilitates quick adjustments to your investment strategy. 3. Cost-effectiveness. Compared to actively managed mutual funds, QQQ's passively managed structure carries lower expense ratios, meaning a larger portion of your invested capital goes directly towards market returns. 4. Growth potential. The Nasdaq 100 primarily houses innovative companies at the forefront of technological advancements. By tapping into this segment, QQQ offers the potential for significant long-term capital appreciation. Are there any downsides to investing in QQQ? While QQQ presents a compelling proposition, it's crucial to acknowledge its potential drawbacks. 1. Concentration risk. Although diversified, QQQ is heavily skewed towards technology giants, making it susceptible to sector-specific fluctuations. A downturn in the tech sector could disproportionately impact the ETF's performance. 2. Volatility. The Nasdaq 100 tends to be more volatile than broader market indices like the S&P 500. QQQ reflects this inherent volatility, making it less suitable for risk-averse investors. 3. Limited income. As a growth-oriented ETF, QQQ prioritizes capital appreciation over dividend payouts. Investors seeking regular income might need to look elsewhere. How does QQQ compare to other popular ETFs? Comparing QQQ to other ETFs depends on your specific investment goals and risk tolerance. 1. SPDR SP 500 ETF. SPY tracks the SP 500, offering broader market exposure with lower volatility, but potentially slower growth compared to QQQ. 2. Vanguard Total Stock Market ETF, VTI. VTI holds the entire U.S. stock market, providing the ultimate in diversification, but sacrificing the concentrated growth potential of the Nasdaq 100. 3. iShares Silver Bullet Trust, SLV. SLV tracks the price of silver, offering an option for diversifying into precious metals and hedging against market downturns. Ultimately, the choice between these ETFs hinges on your individual investment objectives and risk profile. Is QQQ right for me? Whether QQQ suits you depends on your investment goals and risk tolerance. Suitable for growth-oriented investors seeking exposure to leading technology companies and comfortable with higher volatility. Not suitable for risk-averse investors, income seekers, or those seeking broader market exposure beyond the Nasdaq 100. Consult a financial advisor for personalized guidance to determine if QQQ aligns with your financial goals and risk appetite. What are some key statistics and indicators to consider when investing in QQQ? Before diving into QQQ, consider these key metrics. 1. Expense ratio, currently around 0.09%, reflecting its passively managed structure. 2. Top holdings, Apple, Microsoft, Amazon, and Tesla currently dominate the holdings list, highlighting the tech-heavy concentration. 3. Historical performance. While past performance doesn't guarantee future results, QQQ has delivered an average. Are there any alternatives to investing directly in QQQ? You can access the Nasdaq 100 exposure offered by QQQ through various options. 1. QQQ options. Trading options contracts on QQQ provides leverage and the ability to hedge your existing QQQ holdings or speculate on its future direction. 2. Futures contracts. Experienced investors can utilize Nasdaq 100 futures contracts for short-term directional bets or hedging strategies. 3. Mutual funds. Some actively managed mutual funds focus on mimicking the performance of the Nasdaq 100, offering an alternative with potentially different holdings and expense ratios. Remember, each option carries its own set of risks and requires careful consideration before implementation. What are some common strategies for investing in QQQ? Investors employ various strategies when incorporating QQQ into their portfolios. 1. Buy and hold. For long-term investors, simply buying and holding QQQ can be a simple yet effective approach, leveraging the historical growth potential of the Nasdaq 100. 2. Dollar cost averaging. Investing a fixed amount periodically, regardless of the price, encourages disciplined investing and mitigates the risk of buying at market peaks. 3. Sector rotation. Investors with tactical expertise may attempt to rotate between QQQ and other sector-specific ETFs based on perceived market trends and opportunities. Tailoring a strategy to your specific goals and risk tolerance is crucial for sustainable success. Conclusion. The QQQ ETF, with its potent blend of diversification, liquidity, and growth potential, remains a cornerstone for many investors seeking exposure to the Nasdaq 100's powerhouse companies. However, understanding its inherent risks and limitations is crucial to making informed investment decisions. By posing pertinent questions and seeking diversified knowledge, you can unlock the full potential of QQQ and embark on a rewarding journey in the dynamic world of ETFs.